So Treasury Secretary Janet Yellen out on the hustings promoting Bidenomics. But you know what? Using the data, the actual numbers, especially the last 6 months, she's got a pretty strong case right now, empirically. Treasury is arguing we have a, quote, soft landing, strong labor market, rapid growth in GDP, cooling inflation. And I just want to add, virtually no economic model, whether it's the Fed, CBO, Professional Forecasters Survey, the Wall Street Journal Survey, the Wall Street Consensus, or me, frankly, expected stronger growth with lower inflation, particularly in the last 6 months. Nobody forecasted this. So let's talk about it with Steve Moore, Committee to Unleash Prosperity Hotline and host of More Money on WABC Radio, and the great Steve Forbes, media chairman and editor-in-chief of and author of Inflation, What It Is, Why It's Bad, and How to Fix It. All right, Steve Moore, objectively, I'll start with you. Objectively, empirically, this was a year where almost everyone in the world, from the highest to the lowest, expected either a slow growth or a recession and a lot stickier inflation than we got. All right. And the last 6 months have been, semi-euphoric. Those are what the numbers show. Nobody predicted it. Now, the Bidens, there's a story that Biden's giving up on Bidenomics. He ought to probably stick with Bidenomics, at least for a little bit. The public doesn't like it. But why is it? How did this outcome that no model predicted, Steve Moore, how did this outcome happen?
Yeah, well, by the way, first of all, Larry, I want to congratulate you. I think this was the first time in the history of American TV you had a United States senator on the air with a United States House of Representatives member. That never happened, so I don't know how you pulled that off.
We did.
Look, the economy is clearly better. I was not, just for the record, I was not one of those economists on Wall Street who said we would have a recession in 2023. You just have an amazing private sector. You have those seven magnificent seven that have really carried the economy so dramatically. So, and I always, look, I love to see a strong economy, as you and Steve Forbes do. I love to see a strong stock market. I think the big problem for Biden right now is for at least half the population, they're just not feeling the effects of this. If you look at median household income, and you know this, you've cited this statistic many times, adjusted for inflation, the average household is actually poorer today than they were 3 years ago when Donald Trump left office, and there's no getting around that. The people, people tell me that at the grocery store, they tell me that at the hardware store, that they just are feeling financially pinched. One other thing, look, these growth numbers are pretty good, but let's not forget that the biggest sector of the economy that's growing, both in terms of employment and in terms of GDP growth, has been government, and that's a problem. We should be shrinking the government, not growing it.
All right. So I would argue, what I call the affordability crisis is very much present. And prices are rising faster than wages. And real incomes still falling. But I will say this, less so, Steve Forbes, less so. Recent months, actually, wages have gone up faster than prices as inflation has cooled. Now, over the 3-year period, you still have a problem. And I think that's why Bidenomics pulls so badly. But really, it's just interesting to me. Everyone wants to politicize all these numbers. I understand that. Lefty bloggers attacking conservatives and so forth. But not all. It's like you can't, the Fed, CBO, they're not right-wing activists, right? They were expecting either a major slowdown or a recession. Just go back and look at their estimates, for heaven's sake. All the survey of professional forecasters, the survey of Wall Street Journal forecast, I acknowledge that I was much gloomier than this story has turned out in 23. Why? Why do you think this is? I don't think even Joe Biden understands it because he's not talking about Bidenomics anymore.
He doesn't understand much these days.
I know. He's leaving it too soon, I think. He's leaving it before it peaked. But anyway, why do you think this has happened?
Because the models didn't take into account the COVID shutdowns. The COVID shutdowns did to this economy what a wartime economy does. Totally discombobulates everything. It takes time to recover, to get the supply chains working again. It takes time to have people go back to their old jobs, and many of them don't. So all the models are predicated on a peacetime economy, not a post-war economy, not a post-COVID economy. So as Steve alluded to, you look at that jobs report. it's got some clouds in there. You take out government, you take out healthcare and education, which is mostly government, and leisure, which still hasn't fully recovered from the lockdowns. The average came 3,000 jobs a month in recent times. So this is a small basis. And you do have a tale of two cities here. A lot of people are struggling. A lot of people are over in debt on their credit cards. And so the economy is not as strong. So I hope they go out there and say, see how great it is? And the other thing is, and this is a subject for another time, but GDP counts government spending as a plus instead of a minus.
Yeah, no, that's correct. I just want to add to it, though. Today, you had the S&P CoreLogic, house prices up 5% year on year. If you own a home, that's awfully good. If you don't own a home, it's not so good. Consumer sentiment came out today and corroborated the earlier numbers. Big up move in December and January. And the JOLTS number, the jobs opening number, were stronger than people thought. The Atlanta Fed GDP estimate for Q1, Steve Moore, I think is about 3%. So I agree with you fellas about government. I've written and talked about it myself. But the question, I mean, here, go back a year. The first half of 2022 had 2 negative GDPs. All right. Then you've had a stronger than expected recovery. If you're a Phillips curve model, if you're a supply side, nobody would have predicted this. No one, to be honest with you. The boom in the stock market, which really started in mid-October, late October. And by the way, Wall Street's going to be wrong. Wall Street's looking for, I don't know, 6 or 7 Federal Reserve rate cuts. Not going to happen. There's no reason to cut rates if you're the Fed. You've got strong growth and you've got falling inflation. It's like almost Goldilocks, Steve Moore. Almost golden. If Joe Biden was any good, he'd be out flogging this. Let me tell you, the guy's just not copacetic enough to deal with it.
Well, I think one of the big questions that is going to be obviously in the presidential race is, are you better off than you were when Trump was president? Do you think these policies are working better? And, let's just take the stock market, for example. I just ran these numbers for your show, Larry, that if you inflation adjust the returns, obviously, because when you invest in the stock market, right, Steve Forbes, you're interested in your after inflation, not your before inflation rate of return. So in the first 3 years of Trump's presidency, the S&P 500 was up over 30% in real terms. You know what that number is under Biden? Even with the rally that you're talking about, it's up about 8 or 9%. So, a lot of these things were a lot better than Trump. The other crucial thing is that Biden has done a lot of damage to the economy with a lot of his policies, and especially the debt policies. But let's not forget, you know what's still intact, Larry? That tax cut, that Trump tax cut, that really put a lot of juice into the economy. And hard as the Democrats have tried, they have not been able to raise those tax rates. Well, I guarantee you, though, give them another shot. If they have another 4 years, those tax rates are going through the roof.
I'm going to give Steve Forbes the last word in 30 seconds. But Yellen and the Bidens don't talk about overspending, over borrowing, and I'll just say over debt. I mean, they don't talk about that, which may harbor very badly for the long run.
It does indeed, because who finances that? What government spending does, they think money comes from God or wherever. What it comes is from we the people. Government takes the resources, allocates those resources, and calls it stimulus to the economy. Already, you look at the microchips. They're getting that huge bill that we know when government gets involved in the private sector, it mucks things up, slows things down. Microchip industry would be much stronger, semiconductor industry would be much stronger today if they'd never gotten that bill through, because their access to capital, they'd been able to do what they needed to do quickly.
All right, I got to jump. Steve Moore, Steve Forbes, and all forecasters out there, thank you very much.